Why 99% of real estate investors miss out on huge profits, and how you can avoid their mistakes to build serious wealth. Now, there are multiple ways to win in real estate, but most investors focus only on one. Let's talk about buy and hold, buy and flip, and buy and build. The three big strategies you can use to grow your portfolio. But here's the thing, it's not just about owning property, it's about leveraging everything real estate has to offer. Buy and hold gets you rental income. The goal is that your tenant's monthly payment covers your mortgage expenses and creates cash flow. Plus, over time, you build wealth through capital appreciation and principal paydown. The longer you hold, the more you benefit. Buy and flip lets you take advantage of capital appreciation by buying low, improving the property, and selling high. But this only works when the market's right. Flip in a down market and you're scrambling to sell or turn it into a buy and hold, which may not be your original plan. Buy and build gives you control over the design and value of the property from scratch, but it comes with higher risks and upfront capital. The potential? Big returns through appreciation and rental income. Why real estate wins on all fronts. So it's not just about cash flow or appreciation, it's also about the tax benefits. Did you know that you can write off expenses for the property, deduct interest payments, and even leverage equity to buy more properties? You can literally borrow money to grow your portfolio. Pull out the equity for a down payment on the next property and still write off the interest you're paying. Now that is a winning strategy. Here's what most investors miss: treating real estate like a business. Your property is the store and your tenant is the customer. That means you need to carefully assess the location, tenant profiles, cash flow, and your exit strategy before buying anything. It's not about buying the cheapest home or pre-construction and expecting it to skyrocket in value. It's about being intentional on what your investment objectives are and strategic investing. Common mistakes investors make. Now, let me save you some of the biggest mistakes I see. The first is not having a mortgage assessment done. You always want to consult with a mortgage broker first before you start looking for property. Know exactly what you can afford and what loan terms are the best for your investment strategy before you start looking at real estate. The second is not treating it as a business. So your property is a money machine. Visit the property to ensure it's in good health and just take care of it. You wouldn't buy a retail store and never visit it, so real estate is no different. The third is buying pre-construction blindly. You can expect the value to go up, but what if it doesn't when you need to sell it? If the market drops, you could be forced to make up the difference. Have an actual strategy rather than buying and hoping. Fourth is ignoring cash flow and exit strategies. Always have a plan for what metrics to hit in order for you to sell your asset, and make sure the property hits your investment objectives, or at least is working its way there. So if you want to build wealth, think beyond just buying a property. You need a complete strategy that takes advantage of cash flow, capital appreciation, tax benefits, and most importantly, leverage. And remember, real estate investing is not really a sexy game. You're not out buying like $1 million modern, super nice, shiny homes to rent out. They're just your typical average single family home that's gonna get you stable income over the long term. So you're not gonna have crazy swings like Bitcoin, right? But just remember that real estate is stable. Want to dive deeper into real estate investing in Calgary? Well, check out our YouTube channel for a full playlist on how to maximize your investments and avoid common mistakes.